Hey, welcome back everyone. It is time for another red hot covered call video. Hey, look, today we're going to talk about how I double dip my favorite stocks using cash secured puts, covered calls, making money on both sides of the trade. Look, when I tell you I'm an active trader, that's an understatement. I love playing covered calls on the top end out of the money on the stocks I own, and those same stocks I'll sell a cash secured put in the same time frame, double dipping the premiums. We're going to talk about that today, and if you're a salty dog cover call writer, I think you're going to like it. Hey, look, before I get going, if you've never been to my website, ctpdashboard.com, I want you to check out all the free stuff I give you. I upload to CTP Dashboard every Wednesday with the best stocks so we can research to find our next great cover call candidate. Offered up to you for free. It's a spreadsheet, so there's no software and there's no hooks. And hey, look, if you haven't been to the Facebook page where we have our off YouTube discussion, I want you to go to Facebook and search CTP Dashboard and like my page. The Facebook CTP Dashboard page gives me a chance to give all you loyal fans updates on where I'm at with the dashboard, and I even post up some thoughts on the stock market. It's my off YouTube discussion page, and I want you to like it. And if you were here last week, you'd see that I added a free version of the closed-end fund dashboard to the free CTP dashboard, for which you can download right now. And hey, if you're new to my channel, I'm not sure how you found me, but you found me. And that's a good thing, because I do this every week, bringing you frequent and relevant trades using covered calls, cash secure puts, so we can make it flow like water. I show you my trades, we talk about them, and I hope you learn something. And if you like what you're hearing today, I want you to subscribe to the channel. It's right there, and it's free. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. And what I'm doing, I'm in the lab, always trying to up my game, upgrading my spreadsheets all the time to help me keep the numbers in front of me. And here's the deal. The free CTP dashboard has the new closed-end fund dashboard for those income seekers. Look, I know a lot of you retirees are looking to make that extra guaranteed money in retirement, and we can use covered calls and cash secure puts to do that. But look, a lot of people want to use closed-end funds to generate monthly dividend income. So for me, that is the bigger wealth accumulation mentality that I have. And I always want to share it to you. I always want to give you ideas. For those who wanted an upgraded version, a beta run, I have that ready now. I'm going to include this link in the descriptions below. All you have to do is go there, click on it, open it, make a copy to your Google Drive, and you too will have access to the upgraded closed-end fund dashboard. And hey, I hope it upgrades your dividend income game. Now look, let's talk about my game and what I've been doing. This summer I've been hitting the vacation trail, and I noticed I haven't been able to write as many covered calls or cash secure puts as I'd like. I was on vacation, I was traveling Europe, and as I explained in one of my videos, the times are totally different, and I just found myself watching. So I had a couple months there where I didn't even meet my goals. But August is setting up to be a good month for me. Already made $3,200 this month, and I have one cash secure put coming off the books this Friday and one covered call for September. So we're trying to keep this rolling. I'm trying to get to the goal of $50,000 for 2018. And right now I'm at about 14%. When I close these two trades, that's going to bump me up to 15+%. And as of right now, I'm doubling the S&P 500. Remember, this is an experiment for me in retirement. Can I use this strategy to generate that extra monthly income, and can I beat the stock market doing it? Remember, in 2017, I made $39,000, making cash on cash 18%. Now, the market was up about 22%. But hey, look, I made 18% using a new strategy, and for me, I'm totally good with that. Now I'm learning the skill. I'm learning the skill that's going to help me in retirement to generate that cash on cash monthly income that's going to help me in retirement. That's why I'm so passionate and I bring the energy, because I know this sometimes confusing, sometimes overwhelming strategy is the hurdle that prevents a lot of you from getting involved. And that's what I do here. I show you my trades, we talk about them, so you learn something. Now look, let me show you those two trades that we're going to talk about, how I use the same stock to double dip profits. Here's a simple setup. I'm using WIN. Now, you guys know that WIN fits my risk profile. And here's the deal. WIN's risk profile is anywhere from $140, $200, up and down. And man, if you don't have your emotions in check, if you don't have that cast iron stomach to be trading stocks like WIN, then hey, you need to step to the sidelines, because this can be volatile. Now, WIN is a great company. They're a part of the S&P 500. They pay a great dividend. It meets my risk profile. So so I use WIN. Now, I want to own WIN, and I'm willing to buy the shares or sell cash secured puts to own the shares. This is very important. This is a golden rule that I cannot hammer home to you enough. With that said, WIN can move anywhere between 20 and 30 points in a month, and it can be volatile. But for me, I like WIN. I'm going to use WIN. And that's what we're going to talk about right now, how I double dip WIN to generate double premiums in pretty much the same time frame. So let's talk about these trades. If you remember in a couple videos ago, I stuck it in on WIN at about 153, and I wrote a couple covered calls, and I was going to collect a dividend. And I actually thought WIN was actually basing here after some nasty sell-offs. So I went ahead and picked up some WIN at 153, and sure enough, it did exactly what I thought. It rallied off of 163 and got as high as 168, and I'm feeling good, right? So for me, this is a green trade, and I'm feeling good. Now, in that last video, I told you that even though WIN had earnings, I was going to go ahead and try to sneak in a covered call 30 days out, hoping to avoid the volatility of earnings. And I did, and all is going well. And look what happened. We get Sands announcing earnings, which weren't good. Then we get Caesars announcing earnings, not good. And then WIN announces earnings, and look at this. WIN tumbles from 168 all the way down to 138. And I feel like I am holding the bag. But here's the deal. Remember when Sands announced earnings and WIN fell in sympathy? Then Caesars announced earnings. WIN fell from 168 to 158. And you know me. Anytime a stock falls about $10 or $15, I'm thinking about selling a cash secured put to cherry pick some profits, because I think great stocks fall to their support line based on short-term news, and then Wall Street starts to buy them back up at the support line. So what I like to do is I like to sell a cash secured put under the support line, hoping that the stock will rebound and then move higher. My cash secured put premium will shrink, and I'm able to then buy that option back, and I keep the difference, right? So in this example, when WIN fell from 168 to 158, if I can write a 148 cash secured put and pick up about $2.70, I think this is a great short-term trade. I think WIN will actually drift lower and then rally higher as earnings come out. Because at the time I thought, well, I thought WIN was going to have good earnings. Well, that's the cash secured put trade. Now, this is a 30-day trade, so I'm thinking, look, even if WIN does have bad earnings, it might fall to my 148 strike, but I think it ultimately rallies. So at this point, this trade is still on the books. I have a 148 cash secured put. I got paid $2.70, and it expires this Friday, August 31st. I still think with WIN basing and heading higher to 146, I think by next Friday it heads above 148. I will not be assigned these shares, but I'll keep that $2.70 premium. And that's what I'm looking to do. I'm looking to cherry pick these short-term sell-offs with a strategy that I think I will not be assigned the shares and the stock will head higher. I'll buy that option back like I always talk about, and we pocket the money. Now here's the deal. Before I move on to that covered call, if I'm assigned WIN shares, I don't mind holding WIN. I get WIN at a lower price and I have a little bit of premium. Look, I'm going to be able to write covered calls on WIN because I think we slowly get away from this earnings report news cycle, and I think we start to move a little bit higher. WIN is one that I don't mind holding, so I'm going to play WIN. Let's talk about that covered call. Now, WIN has fallen tremendously because of earnings. And intraday, it hit 138. And like I said earlier, I'm really feeling like I got kicked in the ribs because I had WIN at 168 and could have easily sold profiting from 153 to 168. But look, that's not the game I play. So I write the covered call, WIN falls, I buy that option back. Here I am holding WIN at 145. Now, I feel like it's going to go higher. So for me, having a cost basis of 153, I'm going to use a covered call here, a deep out of the money covered call, to pick up some premium while the stock bases and starts to head higher. So what do? I write a 30-day 160 covered call and I get paid 98 cents. For me, I'm thinking, look, I'm not going to sit on my hand. So although my cost basis is 153, and the stock's now at 145, I'm going to write that 160 deep out of the money, pick up $1 per share, because I feel like WIN is not going to have any news that's going to rocket the stock in 30 days above 160. But hey, if it does, I'm in at 153. I've written a bunch of covered calls and collected a dividend, so my cost basis is actually lower. For this trade, my purchase price is $153, and we're going to use that number. So if my shares are taken away at $160 plus the $1 premium, I'm going to collect $161, this covered call, and that's going to be a clean trade, and we're going to move on. So in summary, this is how I'll use one of my favorite stocks, one that I'm really comfortable using for this strategy. I will buy the shares, and then I will write covered calls on the share. If the stock were to fall at support, I like to then, below support, sell a cash secured put, never expecting to be assigned the shares, collecting that premium. I call that cherry picking some cash secured put premium. And I play this in the same, basically in the same time frame. And for me, if my shares are taken away, I make the out of the money covered call money plus the premium and the cash secured put premium, because as the stock moves higher away from my cash secured put strike price of $148, that premium is going to go to zero. I'm going to pocket that $2.70. So for me, it's a double win. Now, what's the downside to this trade? Well, of course, if win keeps going lower, I'm going to be stuck being assigned new shares at $148. Now, if I play this right, it's not going to fall that far. What I'm going to do is reboot the strategy. We're going to write deep out of the money covered calls until we get above our purchase price. Then we can really tighten up the strike prices, making more premium, because now we're in the green with the trade. And if my shares are taken away higher, plus the premium, hey, that's a winning trade. So look, in this case, I'm going to collect $1,100 crumbs, and if my shares are taken away at $160, you could see I'm going to make even more crumbs. And this is what I do. Now look, I'm using a stock that I'm very comfortable with, and I have no problems holding. That's the key here, and that's a golden rule of covered call writing. You need to understand the risks, and the risk is me holding the stock. In the case of Win, it's traded as high as 200 and as low as 138 recently. So I understand the risk. Now, with that said, I own shares and I'm going to write covered calls on those shares, and I have cash sitting on the sideline. I don't mind buying more shares lower because I feel comfortable owning Win. So this is what I do. I keep things interesting and exciting for myself using covered calls, cash secured puts to make premiums on both sides of a trade. Now, whether you would make this trade or not, hey, that's up to you. If you learn this strategy, if you get your experience, you can double dip on the stocks that you own, and I think you're gonna like it. Hey, look, before I let you go, I want you to bang that like button if you like what you heard today. And hey, look, share this video. We need to let others know we're talking the good word of the covered call. Hey, look, until next time, I hope all your covered calls are profitable.
All I see is signs, all I see is